Hello and welcome to Business Today. I'm Siddharth Zarabi, and with me today from our Davos studios, Mr. C S Setty, the chairman of the State Bank of India. Welcome to our studio. Mr. Setty, I'm going to dive straight into the topic, the big macro backdrop and financial stability, global interest rates, what's going to happen to tariffs and economies like the United States. One of the key discussion points really here at Davos. I want to begin by hearing your insights, what you have picked up from your global counterparts about the state of the global economy and trade in some ways.
Thanks, Siddharth, for having me on your show. I think it's an honor to be here. As far as the talk in Davos is concerned, the India story still continues to be positive, despite whatever couple of quarters we have had, degrowth, or the growth not happening as much as we have anticipated. From a global economy perspective, I think there are certain challenges and there are certain uncertainties both on the geopolitical environment, particularly on the tariffs, what you mentioned. Everybody is concerned how the trade and tariffs are going to behave, how it is going to impact China, India, and obviously, rest of many countries, what they're talking about. But my assessment is that India that way has diversified its export both in terms of product range as well as the markets. So even if assuming that there's going to be some action on the tariff side, we believe that it is not going to really impact India in a big way. As far as the economy is concerned, the stability of banking system is strong. If you have seen the financial stability report which is released by the RBI recently, the stress test indicates that the bank balance sheets, the financial system balance sheets are strong enough to face any challenges which are going to happen.
Shock.
Yeah,
right.
yeah. So obviously the capital buffers are sufficient. But the yields going up in the developed economies obviously will compel central bank to look at some rate cut somewhere in the February itself. That is our assessment. Yeah.
Do you expect the changes that we saw in yields globally, is that phase over, or do you expect that to continue? And if so, how far?
The yield movement, of course, in the US with the recent change in the political helm of affairs, obviously had moved up, and that volatility probably will continue for some time, both in terms of yields of the securities as well as that yield movement will impact the capital markets across the globe, including India. So I think this uncertainty will be there for a couple of months.
Yeah. One of the things that is being picked up here is the fact that most US CEOs appear to be very confident about the prospects of the US economy, and that, because of its status as the largest consumer economy in the world, will have a further second round impact. Given that you spoke about your expectation of a February rate cut in India, is that just going to be a one-off, or do you expect that to be the beginning of a rate cut easing cycle to some extent?
So the yield, as I mentioned, in the developed economies, yields going up, there will be some pressure on the central bank back home to ensure that the expectations are met. So our house view is that the February rate cut would be smaller in size, more in terms of signaling that the central bank is open ready for this, and then the overall in the calendar year in 25, 50 to 75 basis point is an estimate what our house view is there, starting with 25 basis rate cut in February.
Okay, yeah. So that's a very clear point, the house view of given by the SBI chairman. I want to turn to one sector which has also dominated the discussion back home, and which is what is happening to the currency. That obviously has a benefit when it comes to our export, but it has a negative impact when it comes to imports. I wonder if there is a house view on currency also that the State Bank has.
I don't want to take a call on which level it will be, but would like to give a couple of statistics in terms of, I think this is also we published in the public domain, our research department. If you see from April 21 onwards, the rupee movement was closely linked to the dollar index. As the dollar index strengthened, the rupee depreciated.
Absolutely.
And it's almost similar level, 17% movement from April 21 onwards, purely on account of the dollar index movement, which is a different scenario from global financial crisis what we have witnessed. If you go back to 2008 to 2014, the dollar index had hardly moved 3 to 4%, but the rupee depreciated almost 45 to 46%. So, which means that among the emerging nations' currencies, Indian currency has done fairly well, and it is linked in more in terms of dollar strengthening than
and not a weakness of the economy per se.
Exactly.
But Mr. Setty, I have seen one brokerage report which is very clearly saying that India is in a structural slowdown now. It goes on to call, for example, for specific consumer side, consumption oriented measures. Is that a view that you share? Because the State Bank of India has its pulse on everything of the Indian economy. Are we in a structural slowdown?
I don't call it structural slowdown. Earlier also I had mentioned that this is a temporary phenomenon what we are witnessing. Structurally, India is in a good position, good story to continue. But definitely there are certain challenges in terms of core sector not investing, private consumption, private investment, capital investment, particularly in the steel and cement, is not happening as much as we anticipated, because these sectors have reached the capacity utilization of 75%. I think they're all looking at the external environment, how it is going to behave, particularly on the steel side. But there are investments which are happening in the renewables, roads, and we are witnessing that investment. But the core investment is critical for us. It has to come back. The private capex has to come back. It has got on the effect on the consumption also, obviously. So hopefully, the budget will give some spark in terms of the consumption.
Is there a trade policy response required to, for example, for the steel sector, which is also facing some pressures on account of imports, and we know what is happening on that front? Is there a trade policy response also required from a tariff point of view?
So I think a lot of efforts are being made in terms of assessing, what are the impacts, particularly certain categories of product in steel, for example, whether there is a potential undercutting of the import costs, and maybe some measures in terms of anti-dumping would help the industry in a big manner.
What's your outlook on credit growth, Mr. Setty? Because in the backdrop, I think the juncture that our banking system and overall economy is that there are certain pressure points in terms of consumption. We saw what happened in the automotive space, for example. Real estate is also pretty delicately poised, because some people are saying that prices have reached overheating territory in certain segments. So given that, what's your outlook as far as credit growth is concerned?
Obviously, I can't talk about SBI because
numbers are at an industry level.
Industry level, whatever we have seen, the results coming now from the banking system, and also the numbers what the central bank has published, there seems to be some convergence between the deposit growth rate and advances growth rate. Obviously, about 12% is the advances growth rate, and around the same level in the deposit growth rate. But mainly the credit growth is continues to be coming from the personal segment, and among the personal segment, personal loans, home loans continue to be a robust sector. So broadly, I think lower double-digit growth is what we are anticipating, the credit growth for the system. Yeah.
Do you think a period has been reached where earlier RBI concerns around unsecured loan growth and some of the measures that it seemed to respond at a systemic level, that phase is over, and the regulator would be more sanguine right now?
The growth rates of unsecured personal loans obviously slowed down with the measures what RBI took. There are some structural changes also what RBI has done in terms of ensuring that both at the individual level and the household level, the debt is not, leverage is not as much as which needs, which develops some concern. That structural change is basically frequent periodical updation of the credit scores and credit history, which makes the lenders to take a call what is the leverage at the individual level. Obviously, it has now, I believe, is stabilized in terms of the growth rates in unsecured personal loans.
So it's stabilized, and hopefully that is going to continue to be there. I want your view on inflation, because when I spoke to you around 6 weeks ago, from that time to now, have you had occasion to sort of look at the inflation prospects, and what's your own reading of how that will pan out? Because that obviously will have a larger bearing on overall monetary policy and liquidity management as well.
Yeah. The last time also I did mention in terms of the concerns on the food inflation side, the crop which is arriving, we are seeing that certain categories of food, the inflationary pressures have come down. Hopefully the Rabi crop also would be having a good output now. It would help us, present a good numbers in terms of food inflation point of view, which would enable the central bank to take a call on the interest rates.
Absolutely, and that will be a crucial call. As we wind down the conversation, I want to turn to the overall sort of backdrop. 3 years ago, when I had the then SBI chairman pretty much seated right here to now, India's banking system and the kind of repair and growth we have seen over the last 10, 11, 12 years is now, how would you describe the health of the Indian banking sector as of now?
This has been a strong footing, even the financial stability report which has come, recently, places the banking system in much robust condition, particularly when you apply the stress test, the capital buffers are sufficient. There are two things. One is, of course, the banking system has strengthened the balance sheet. More importantly, I believe that we have strengthened the underwriting processes. We have adopted technology and digitalization in a big way, trying to reduce the operating costs as much as possible. So I think we are much better positioned if any headwinds are going to come. Definitely, the banking system got benefited by the benevolent asset quality life cycle which is going on now. Hopefully, this will continue for some time. But with our process improvements and underwriting standards being improved, this cycle probably get delayed, in terms of how the banks are going to look at it.
One final question, because we are at Davos and the subject is the intelligent age and technology, generative AI. You yourself have an interest in this subject. Banking and technology, what have you been picking up in terms of the future frontier possibilities?
There's a humongous discussion in terms of productivity improvement AI can bring in. And my view is that while we have adopted predictive analytics in a big way, most of the banks, large banks, we still have a long way to go in terms of the AI adoption in the risk management, customer protection, and more importantly, increase the productivity of the employees. So 2-3 things which have come up. I spent considerable time talking to the technology industry experts who have come here, particularly on the AI side, because we intend to scale up our AI adoption within the bank. Is that the time for AI investment is there, number one. Number two, the AI investment costs have come down, which is a good news for many of us. Number three, and most importantly, what they said, that's the AI adoption should go along with the change management, what we have to do among the people. Because ultimately the people are the ones who are going to realize the increased productivity. And AI is obviously a set of tools, right? So the change management is something what we need to adopt internally to ensure that the AI rolling out is more meaningful and more effective.
Do your colleagues, the entire rank and file, do they fear AI, or are they openly willing to let it augment their own business processes?
Yeah, you use the right word in terms of augmentation. I think it's not in terms of replacement or substitution of the human resources. I think we are focusing more on in terms of providing the capabilities to them to perform better.
Absolutely.
Yeah.
Mr. Setty, there's so much more to talk, but You have a pretty packed schedule here at Davos, so I'm going to let you go at this stage and wishing you all the very best. That was the chairman of India's largest bank with us here from Davos. I'll be back with more. Until then, goodbye. Thank you, sir.
Thank you.
Hello and welcome. America's new president Donald Trump is threatening new tariffs against countries like Mexico, China, even India. He's wanting to send illegal immigrants back. There's a huge amount of geo-economic churn globally, and to talk about